we are going to cover something very interesting, what's happening in the banking world. Bill Gates, is the voice loud enough for you? It's loud, okay. There's a lot of noise from outside. Okay, Bill Gates once said that what we need is banking, not banks. What he essentially talked about was the disintermediation of banks and banking. When we think about bank is an institute which is a trust which brings about the overall reliability with us. But today what is happening is banking as a service is moving away from banks, and a lot of intermediation is happening in that. One of the important things, what's happening?
That's not the right.
That is not the, yeah, that is, I was just going to present on something else, I guess, okay. Sorry guys. Okay, wonderful. So when we think about banks today, they are actually losing touch points with the customer. And one of the biggest challenges which they're facing is how should they deal with technology? How do they arrive at some of these solutions by leveraging technology? So when we look at some of the study which was done in the US, you realize that there are around 11% of the customers can be lost to the alternative banks. In UK, 9% of the customers are already banking with alternative banks. And in Australia, the Royal Commission created a drop of 3.6% in the popularity of banks, and the customer satisfaction dropped by 3.6. What is happening is in the broader scheme of things, we are also realizing the banks are taking effort. The banks are trying to move forward. But one challenge which they're facing is their rigid technology and some challenges which they would be experiencing in transforming their legacy infrastructure. There are different ways by which banks are addressing that. One is they're thinking about the complete re-platforming. Some of the ambitious banks like NAB, TSB, those try to take advantage of re-platforming and then respond to some of the digital attackers. The challenge was that is those were long-term projects, and they were not able to quickly arrive at the result. One of the other alternatives which banks are picking up is something which I'll put it on the screen, which I like this. I don't know, few of you might have been to Sydney, and when you walk in Sydney downtown, you actually see some of these buildings. These buildings are primarily a combination of something which is old and new. And a lot of banks are now trying to put together digital as something what you see on here, which is like the facade is there for the older enterprise, and then you have digital at the top. That's also running into some of the challenges. Now what we see is there are, if we just need to think about what are the waves in which these things are happening. The first wave has started pretty much early, where we saw a lot of fintechs taking leap. And in the US, you would see that Quicken, as well as Cabbage, as well as Betterment, all of these are now running towards the decacorns, right? So their valuation has zoomed significantly. Now that is the fintech wave, and we see that a lot of fintechs which are outside today, and you guys are part of those fintechs. We will also see few unicorns and decacorns coming from India. The second wave was more where these digital attackers or digital native organizations like Google, Amazon, they ran into doing everything. And there was one study where they said now you have all the organizations which are which are digital native look alike. They are very similar organizations, and you find they're doing almost everything. So finance was one of the things which they wanted to address as their unmet needs for the customer. And one of the big advantages they have is they have significant customer touch points. All of us are customers of these companies in one way or the other. But what's interesting is the third level or the third wave of digital attackers which is coming in. In the first two scenarios, at least till when we see that some of the governments are opening up core banking or the banking licenses for some of the organizations, you would see that these two fintech and digital giants were still away from banks, and banks probably were thinking that they do not have the licensing and they are not on the equal footing. So one new thing which came up was with these digital attacker banks, you realize that now they are on the equal footing. So most of these banks will be able to offer the same services which banks are offering. So this third wave is very important for the banks to address. And that's why we are looking at what are the different strategies for banks to deal with all the three waves. And the challenge with the banks today is that all the three waves are going to hit them at the same time. Some of them thought that they were a lighthouse, but now they are running for addressing some of the challenges with those. Now, if we think about the banks which are Monzos and the Revoluts of the world, I guess you guys have heard about this. UK is one of the most advanced countries where you would see a lot of these challenger banks or the attacker banks coming in. What you see is there is a very interesting conversation which I was having with some of the millennials, and they said, Facebook is old for old people, right? How many of you believe that? Right? I think I see few hands going up. It's basically the word of Insta and Snapchat, right? I mean, it will go away, right? And rather than convincing that, hey, Facebook is, useful, obviously Facebook is doing a lot of other stuff, like they're getting into a dating service, they're trying to find their niche, right? But it's exactly the problem which some of the banks are having from their branding perspective. So if you look at, there was one study which was done in UK in terms of what is the branding perception of the incumbent banks, which are the Lloyds and Barclays of the world, versus these new banks. You found that some of these banks were more preferred by a lot of youngsters and people who are living in the digital world or who are digitally savvy. They were ready to transact, and they found it really easy for them to move forward with some of these banks. Now, if you look at the numbers, right? I mean, some of these numbers, Revolut, obviously, the story of Revolut, you probably know that, it's the first unicorn in UK, which got the banking license. And that is a story where you see all of them moving. Today, the rate at which they are acquiring some of these customers is phenomenal. You would not believe that the cost for the traditional banks to acquire similar customers would be significantly higher as compared to what they are running at. And one of the important things on these startups is, if you see Chime, right? I mean, they are pretty much connected to the user. They are pretty much connected to what the user is looking for. So they are offering certain accounts where they would say, look, I am going to be rewarding the person who is going to be following certain rules. It's very similar to when you think about some insurance company says that, if you hit the gym every 5 days or whatever, like, you run X number of kilometers in 1 week, then you will be rewarded, right? I have few friends who are actually getting their cash back. So in terms of Chime, they offered 10% of a bonus to people who are going to be saving, right? And look at the number of customers which they are acquiring at the rate at which they are acquiring. One of the important things we also need to realize that these guys are not alone, right? For them, there is a lot of investment support, and there are, at least in the last till last couple of months, there were only a couple of banks out of these who were profitable. So most of them have been actually funded by some of the investors. But at the same time, they are acquiring a large set of customers. But what do they do after acquiring these customers, right? So I like to equate this story with, most of you would be familiar with Kaun Banega Crorepati, right? And there is a phone a friend, or there are a lot of helplines which are available. Now, in a way, these guys have looked at identifying their ecosystem. So what they do is they acquire a large mass or the large customers, large set of customers, and whatever the means are, they will give incentive, they will actually roll out some campaigns, and they will acquire a large mass. But at the same time, they will not stop there. What they are doing is they are reaching out to a large set of partners. Some of them are partnering with insurance companies. Some of them are partnering with Pret. So Monzo is partnering with Pret, where they are finding out different ways to collaborate with those. The other example is N26 is partnering with hotels.com, right? And recently we heard about a story about Sterling. Sterling has partnered with all the post offices in UK. What that means is you are actually you are a branchless bank. All of these banks have been launched as only mobile banks. But when you partner with somebody like UK Post, you are having access to 11,500 touch points across UK, which means that you don't need to have branches. You could even think about having the cash delivered or cash managed by the post offices. I mean, think about similar scenario here, right? In India, if you are actually launching a digital bank and you are thinking about having access via post offices, right? There's a huge network. Obviously, there is a post office bank which is also coming up. But at the same time, you can think about that as with grocery stores. You can think about that with a different segment of customers who would be looking forward for cash transaction. So partnership actually multiplies their strength. And that's basically going to keep them sustainable over a period of time. And that's where the investment which is made today is going to also give them returns and higher valuation. Now, what do incumbent banks do, right? The idea is, when you think about if you can't beat them, right? You need to be like them, right? So incumbent banks have some advantages, inherent advantages. The first advantage is that they have a lot of knowledge about banking, right? I mean, they are all experienced people. They know the regulation. They know how to navigate through the system. So they have a lot of understanding of their customer, and they have a lot of captive customers. When a bank which is launching a particular platform, which is a replatforming exercise, they're taking a huge risk. We saw earlier that some of the banks were not able to finish some things within the 3 to 5 year span. I mean, they targeted for 3 to 5 years. They were given a lot of assurances, but then it landed around 6 to 7 years. So replatforming a bank takes around 6 to 7 years. But it doesn't still give you the connection to the customer. It still doesn't let you identify what are the challenges today's customers are facing. So in a way, when you overlay the digital challenger, which is basically a unit, which is a corporate venture, which is growing in the shadows of the larger banks, you are able to bring that challenger view, and combined power of this allows you to primarily transition to something which is a broader digital term, right? And in a way, you are looking at something which is agile, which is completely built on new technology, which is looking at customer. And one of the important aspects of when you launch when you launch the challenger bank, you are not looking at products. You are not looking at something which is specific to a product which the traditional bank is already doing. You're looking at a customer segment. So you are picking up either SME, you are picking up millennials, you are picking up specific high net worth individuals, and you are targeting those customers, and you are launching that digital attacker bank onto it. What happens is you are then learning from the journey. This particular engine, which is an innovation engine for the rest of the bank, allows you to try out different ideas. And you realize that a lot of these ideas, which if they were tried by a traditional bank, would create huge risk for a bank. But in this particular model, you are seeing that the risk is isolated, and the bank, which is the challenger model, will allow you to experiment on those ideas. So it becomes a platform for you to launch new ideas. Now, what does it do, right? This is based on some of our experience. We have actually done few projects across the world. What you see is the average cost of onboarding customer. These are again numbers which are outside India. but then some of these would be relevant in terms of the ratio. So you see the customer onboarding cost is going down 5 times, right? So you're actually left with a much smaller onboarding cost, and you can onboard the customers much faster. So you're actually in earlier days, when you want to open the account, you would require at least 3 days. Now on these banks, you would have immediate approvals and you would be able to start your account immediately. Launch a new feature. Most of the times when we go to these client conversations, we figure out that the tussle between business and technology is about how quickly you can launch a certain feature, right? How many of you have experienced that? When business says, look, I want this particular thing to be done in a particular time period, technology says, look, I cannot deliver it. This completely because it's a cloud native environment and it allows you to roll out the features much faster. Instead of 3 to 6 months, you can roll out something in an agile manner in 2 weeks, right? It also reduces the overall cost. It's a completely new business model where your cost to serve the customers, you don't need so many FTEs. So your cost operating model is completely changed. You would see, you can serve same number of customers per FTE. Instead of 1,000, you could cover 2,500, right? So there are a lot of advantages, and at the end, you would see that the companies are now, employees are more satisfied, right? So that's primarily the experience we have seen on these banks. How do we build this? The question is, look, this looks fabulous. How do we actually get this? The technology architecture is very important here. If you think about the whole orchestration layer where it connects, you don't need to throw the legacy. You don't need to build, borrow, and buy. You have a lot of flexibility on that. So in some cases, for example, a traditional bank would think about building KYC in their own premises. They would say, look, I need to build this on my own. In this model, you could even go outside and you can say, look, do I have a vendor or do I have a provider of KYC services who can actually quickly launch the KYC and I'm onboarded, right? I'm able to start the service quickly. So what you see is a confluence of different services which are being provided across a spectrum of whether it's KYC, whether it's payments, and you can hold some components with your, like if you think about the general ledger, right? Where you need to maintain that within the bank. You don't need to outsource it. So you can still continue with that legacy. So this provides you the modular and scalable architecture for the greenfield. Now some of the existing banks, right? We've seen that they look into how they approach the customer. They approach the customer by 3 ways. They'll say, look, I have the captive customer. Can I try and cross-sell few things to them? Second option is, can I look at some of these areas which I have not thought through, right? And can I come up with some of the innovative ideas? The third one, which is the ecosystem approach, which is the partnership. And you heard about DBS and BBVA, and there are large banks across the world who are focused on partnership and the ecosystem. And if you know China, Tencent, Alibaba, these are the ecosystems which are giving them returns and the sustainability for their investments, right? So these banks are also following that. I would quickly cover on, excuse me. There's water. Thank you. What this does to the overall organization, right? I mean, if you look at the left-hand side, your primary focus today was always, how can I get better performance for this bank, right? And then you are looking into operational parameters. You look into, how am I doing year on year, quarter on quarter. The inherent platform or a KPI which feeds into that is the productivity. And that's where you try to manage the levers and you try to look at how do we get the better performance of the company. Now, when you think about the new approach, what you're doing is you're also you're investing something which is for future. You're looking at the ideas. I mean, these small dots actually refer to some of these ideas which are there, which you could bet on over the next 5 years. So you think about those ideas, you incubate those ideas, you think about how can I think about the customer, how can I think about data, how can I look at the technology, and these ideas then get into the experimentation. And those ideas then will feed into a longer cycle of performance, right? So this is the model which will allow the challenger to sustain it, the challenger bank to also provide feedback to the mother or the parent organization. In a way, it acts as a catalyst. So you are able to extract what is best from the challenger bank or the challenger unit, which is within the bank, to extrapolate it to the larger organization. And you don't need to transition all the customers. You can pick up select customer segments which are most relevant for you. Now, how does the one year cycle look like, right? I mean, we live in all the experimentation world. So if it is Google, if it is Amazon, all of them are thinking about specifically how do I experiment the ideas, how do I test the market. Now, in this, you have different players. You have core banking players, so there are a lot of cloud native players on core banking. You have integration partners, you have people who are creating these models or creating the user journeys, who are looking at data, analyzing the customer segment. Now these cycles are very interesting cycles in a way to look at how can you iterate continuously. And you are thinking about 4 phases. So you experiment, then you pilot, then you scale, and then you run. But these are the ideas where you would be able to get something at the end of the 1 year as a proof of concept. And that is allocated to a particular customer segment. So you are not just waiting for a 6-year or a 3 or 4 year long-term solution from your core banking perspective or replatforming. That's going to be that's not going to give you as much as returns as something which you get it in 1 year. That's primarily what I have to cover. Any questions? I mean, I probably have 20 seconds. Last questions. Okay.